This is Dance Studio 411, where we answer your real-life questions about your toughest studio life predicaments. Parent problems, teacher turnover, student challenges, policy dilemmas, and so much more. Let's talk about what's keeping you awake at night and what you can do about it. Here are your hosts, Suzanne Blake Garrity and Jill Tyrone.
Welcome to this episode of the Dance Studio 411 podcast. I'm Jill Tyrone, the Digital Content Manager at Revolution, and I'm very excited to speak with Sean Deaver today. Sean is a CPA and financial planner based in Massachusetts and provides tax, accounting, payroll, consulting, and financial services to dance studio owners along with gyms, swim schools, and child sports centers throughout the United States. His specific areas of expertise include taxes, payroll, bookkeeping, financial planning, tax planning, and business valuations for business buyers and sellers. He's a sought-after speaker and has spoken at many industry conferences throughout his career, and we're lucky to have him as a guest today. You'll hear more about Sean in his own words on the podcast. So let's dive right in and get started. Welcome, Sean.
Thanks very much. Nice to be here.
Well, we are excited to speak with you. I bumped into you at one of the summer conferences and we got to talk in person again this year, which was great. And it's always nice to touch base with you. And I actually learned a nice little tidbit that you're a pilot. So Sean, why don't you talk to me and tell our listeners a little bit about you, how you ended up where you are today, and some fun fact about you, because like I said, I learned that you actually are a pilot.
Yeah, that's probably the only fun fact that I have, unfortunately, but thanks for disclosing that. Just a hobby that I picked up years ago, but then finished it during the COVID days. But about myself, I'm educated as an accountant. That's my degree as a CPA. I worked in public accounting for many years, and then a long time ago, I stepped out on my own and built up my own practice. During college, I was a gymnast and had an opportunity as well over the years to purchase a few gymnastics schools. So at one point, a heavy portion, a majority of my clientele were gymnastics schools. That then dribbled into swim schools. And then about 10 or 12 years ago, we started, jumping into the dance world as well. And now dance actually happens to be the largest segment of clients that we service, between accounting, bookkeeping, tax work, and payroll type services across the U.S. And we service dance schools in about 41 states in the U.S. And I found out yesterday we're getting our first Alaska client. So we pretty much cover the whole U.S. at this point.
That's fantastic. Congratulations on that. I've been following, obviously, your career since we met years ago, and I know that you're doing great things in the dance world and in this space in the industry. So again, I'm really pleased that you're here. Why don't we dive right in? So I asked a question in our member group, and it was basically, hey, what's keeping you up at night about your finances and your budgeting and your bookkeeping? And one of the questions that came out of that was speaking about their company, their team members. And I know that once we start to add on the amount of classes that the students are actually taking, we're trying to figure out if there's a discount to offer, how to actually price that. So Sean, why don't we talk a little bit about how we're coming out of these COVID years and where we should be with fees, tuition, and actually the pricing on those?
I the last half dozen years or so, I spend a lot of time talking and educating people on pricing, discounts, profitability, and such. And first and foremost, I'm a firm believer in raising your prices each and every year, especially in a situation where we are right now, with inflation going through the roof and the cost of products and goods just, increasing, food prices. I think it's actually number one, it's an absolute must, but of course, it's an opportunity for us as small business owners to raise our prices, especially if we haven't in the past, and go a little higher than we have in the past, just because, again, due to current events and current situations. As it relates to discounts, I'm not a big fan overall in discounting, especially when it comes to your average typical student, someone who comes one day a week, takes a lesson for an hour or something along those lines. I try to stay as far away from discounting those as possible. With that being said, I do understand that there are people who do take multiple classes, sometimes, 5-10 hours a week. And those people obviously can't continue to pay the full price, or it's very difficult for them. over the years, we've strategized with clients and come up with different techniques. And at the end of the day, I certainly, the more you buy, the more discount you'll be given. But as small business owners, we really need to ensure that we're not giving away the house. The first thing I notice mistakes that we make is people are quick to discount the second class or the second hour. I would suggest you lean more towards the third class or the fourth class or third or fourth hour that a student takes before the discounts start to come into play. You'll find that number one, it'll have a major impact on your bottom line, but also you'll now bump a lot of people out of getting these discounts. The other thing is important is you need to understand your overall profitability. And when I work with clients in this space and we work on things such as this annually, we're constantly looking at their overall profitability. And then we start working backwards to determine how much we can price and how much we can discount. And a lot, basically, very high level, we determine what it costs to run a class, which includes the teaching fee and some rent allocation, utility costs, insurance, and so forth. We then determine the minimum number of kids in there, and that kind of gives us a price per class that we want to charge. From there, we do things, we look at things percent, and then by the way, we also need to include a profit. So, maybe class 1 or class 2, we want to have a 15% profit on these kids. Maybe the third and fourth hour, we go down to a 12 or a 10% profit on these kids. Then the fifth and sixth, we go down to a 5 or 6% profit, and so on. The key here is that we never take a loss on these classes. We don't want to be teaching for nothing. And if you get to a point where your pricing just seems unreasonable or too expensive, then stop. That's when you've reached your cap. You don't go beyond that. You never want to have a negative situation. And there's nothing wrong with saying, hey, I'm sorry, unfortunately, we only offer up to 7 classes a week or 8 classes a week or whatever the case may be. Many times we find that when we go too many hours, that the benefit that the student is getting, that the dancer is getting, is so minimal after 7 or 8 hours a week anyways, that maybe it's best to just stop the number of classes there and go home early one night. That's pretty much how we take a look at it. And we do that with our clientele pretty often throughout the year just to make sure that we're level setting these costs and prices. And once you get a good groove, then it's easy to update. But that first couple of times, the exercise can be rather robust. So make sure you're having people help you out, your professional advisors and so forth when coming up with these discounts.
That's excellent advice. Thank you. That was really a really good explanation. We have been preaching and really hammering it home, especially this year with the cost of inflation being so high, ensuring that they're raising their prices. So to have that thorough explanation really helps. Let's take it one step further. You mentioned the cost of goods sold. So let's think about costumes, dancewear, recital tickets, even anything that's above and beyond tuition and fees. What should we be looking at in terms of pricing for those?
I'm a believer that we, in any type of business that we visit or that we are participating in, we should be profiting on each and every item. I guess the way to best to say it is we should always be profiting from everything that we do because we have to include our time. And the reason we're in business is to profit. So if you're selling recital tickets, costumes, shoes, whatever the case may be, if you're paying $10 for this, you should be charging 15, 20, 25, something so that we're putting a little extra money in our pockets. An interesting study I did a few years ago, and I can't remember how long ago it was now, but I actually took a look at dance schools and dug down into some of my really large schools, medium schools, and really small schools. And what I found, which was rather interesting and surprising, was that many of the medium and smaller size schools, if you just looked at their tuition and what they make during the course of the year, they actually make no money at all. They break even. The only way they make money is the sale of these other items, and in particular, the recital. So that's certainly not the way I would suggest people manage their business. That's not your goal, but sadly, that is a reality for many people. So it's important that you do mark these things up. You need to obviously be reasonable, but certainly things like recitals, when you're including perhaps videos and pictures and flowers and recital tickets, and maybe there's even as an offsite facility. Then of course, you really need to ensure that not only are you covering your costs, but you're making a hefty little profit on as well.
That's great. And one of the things at the time of this recording, we're heading into a heavy recital planning time period for these studio owners. And we have some great content that's coming out in the month of October, along with this podcast that is really dealing with the whole recital planning process. And having this information is really great so that I think the studios can really understand how much they can really profit and do a good job to not only serve their clients really well, but then also put a little money in their pocket and back into their bank account. Sean, one of the next questions that came up, and again, these are questions right from our members. They're asking them in our member group, but we have a studio owner who's setting up a 501c3 for the company dancers, and she's interested in managing the taxes for the nonprofit. And I know we could speak a whole other podcast on not-for-profits and really dive into that. So is there anything that you can tell us if there are some studio owners listening or they're thinking about, is a not-for-profit right for me? Is there a little advice that you can give them in the short period of time that we're recording today?
A great question. I think my first bit of advice as it pertains to 501c3 is don't. It's so, in 30 years, I have seen these 501c3 and not-profit organizations just be incorrectly set up. They run incorrectly. There's high risk. There's compliance issues. There's even legal issues that are being broken. 501c3s have a great thought. People think, we're going to set up an organization. We're going to take donations. We're going to help some families with paying for competition costs or uniform costs or travel costs or things like that. And unfortunately, 99.5 out of 100 times, they're done incorrectly. And again, oftentimes, we're breaking legal and IRS type issues and rules. Most of the things that you would like to do and that are legal, you can do outside of a 501c3. You can still collect money. You can still raise money. You can still collect donations from businesses and families. You can still do all of those things just as a for-profit business. You don't need the 501c3. The issues that we see most heavily the rules or the laws we see most heavily broken is, number one, when someone creates a nonprofit, you can no longer have what we call point accounts. So this is very commonly issued where, Sally's father or mother goes out and, raises more money and does more bake sales and sells more candy bars and does more of the car washes. So we attribute more points to Sally. Well, think about this for a moment. If you donated blood to the American Red Cross and I didn't, and I got into a car accident, do you think that the American Red Cross is going to stop and say, well, sorry, Sean, you never donated, so I'm not letting you have any of anyone else's blood? No, that's not how it works. The same thing with any nonprofit organization. If you contribute all of your time and energy and money, and someone else in the organization or on the team or in the association doesn't contribute anything at all, they have to share equally in the same amount of money that you receive. So that alone bumps 90% of the nonprofits out from being run legally and correctly. And the tax savings, by the way, don't kid yourself. You can do the same exact thing through your business organization with well-planned tax strategies. There's nothing different there. So I would really caution people in using a 501c3. And secondly, if you have one, I would really make sure you take a look to see if it's being run correctly. Every year, on average, I consult with, I'd say, 5 to 10 organizations that wind up shutting them down because they've been doing things incorrectly for so long and are now running a pretty heavy risk. If you are considering doing one, there are certainly advantages. You want to really make sure that you get a lot of legal and accounting guidance from people that do this every day, not from someone who's just a generalist. I do these a lot. And again, I find out where things go wrong and either tell you, here's how you get on the right path, or let's close it down and see if we can accomplish the same goals through the for-profit entity.
Excellent advice. Thank you for answering that question. So I'm going to wrap it up with one last question that I think is probably at the top of the minds for many of our studio owners, and it has to do with budgeting. So when we're looking at budgeting for the upcoming season, do we look at the numbers from the prior season, or do we look at where we want to be in the future, or is it a little bit of both? but certainly things have changed a little bit because the last couple of years have not been indicative of normal years, let's call it. So Sean, we would love to kind of close out our questions and our podcast today with a great answer to how do you set your budget?
That's a great question. And that gets me excited because it's a financially based question, which then I would believe, mean that people out there are keeping track of their books and their bookkeeping and their numbers and looking at these regularly. More times than not, we find a lot of schools just aren't looking at this often. They're looking at it maybe once a year, or they're looking at it at tax time. First and foremost, we can talk about how a budget's created, but the most important thing about a budget is that you track your budget against your actuals. So if you're not preparing your bookkeeping or you're not keeping on track of it or keeping on top of it, the budget's really useless, to be honest with you. Budgets themselves, always the best starting point is your prior year figures. So if you're doing your 2022, let's say you're going to work on your 2023 budget, then you're obviously going to want to look at your 2022 actuals. That's always your starting point. Now, COVID and maybe into 2021 might be years where you have to go back to maybe a 2019 year or 2018 or something like that. But it's okay if you have a very unique scenario. But for the most part, you always want to use your current year figures, and that's what your next year budget is based on. You then go through and fine tune some things. Obviously, maybe your rent has gone up, or maybe you're going to do a price increase across the top. Perhaps you're giving wage increases of 2 or 3% to your staff. So those things we would modify and adjust and either increase or decrease depending upon the situation. But certainly your current year numbers are where you go. Then once you have your budget built, you should look at this no less at a minimum quarterly. I think monthly, to be honest with you, is probably too much, but quarterly. So you break your budget into quarters, and then you should be tracking your actuals to your budget each quarter. And then if you find that you're off, maybe your revenue isn't where it was, well, perhaps you have to cut down on a little bit. Maybe you can't go to a trade show this year. Maybe you have to pull back a little bit on marketing and advertising. Maybe the meals and entertainment and the travel have to be skimmed a bit so that you can get that profit number to be tweaked. You know, real interesting thing, that factoid that I present a lot in the financial planning world, which I heard a long time ago, and it was really pretty amazing. Do you realize that if you were in a boat and you left the United States for Europe, if you were off 2 degrees, you would actually miss the entire continent. 2 degrees is really not a big percentage. And I try to relate the same to whether it be financial planning or budgeting and so on, that if you're off just 1% or 2%, or just a few dollars here or there, it could really make the difference between having a profitable business and an unprofitable business. So that's why creating a budget is so important at the first, number one, but then number two, really making sure that you track your budget and your actuals to see where you're off and then adjust accordingly. Great question.
That is a great question. And that was a wonderful answer. I love the analogy of sailing off to Europe and being off those just 1 or 2 degrees and missing the whole continent. So that's a great way to put that towards your thinking of budgeting and being, on top of your numbers. So many business owners, small business owners, the dance studio owners that I speak with are terrified of budgeting. I'm not a big fan of it either. So getting to know your numbers, looking at them quarterly is great advice, Sean. So you mentioned a few times about reaching out to professionals. You want to make sure that you have the support that you need. So this has been really informative. The last thing I'd love for you to do is share to our listeners how they can reach out to you, because it sounds like you really have some knowledge and some expertise that would really help them.
Yeah. So obviously the best way to reach out to me is probably through our website, which is www.devercpa.com, and that's DEVERCPA.com. There's a contact us button, there's a request information button, and so on. And people will contact me throughout the year. Maybe they're looking for help or guidance or consultations. Also, people may be looking to change professional providers. We certainly could talk about that as well. Always happy to speak with and meet new folks. So if you have any follow-up questions or things that maybe weren't covered and you want to ask questions, always feel free to reach out.
That's great. And I'm going to link to your website and your information in the show notes as well. So Sean, I can't thank you enough for sharing your time and talent with our listeners today. Thank you so much for being a guest on the Dance Studio 411 podcast.
Thanks for the invitation. It was fun.
Thanks for listening to this episode of Dance Studio 411. Visit us online at dancestudio411.com for more great resources and to submit a question for a future episode. Our number one goal is to help you build a successful dance studio business and keep your passion for dance alive.